So here we are, the week ending October 20th, and everybody's asking, can this market get any tougher? Here's the deal. I think we've got a little more challenge ahead of us, and it's continued to get worse. How? Well, first and foremost, interest rates have continued to move up. We are squarely in the eights in a lot of situations. Yesterday, I locked two clients. One was 8.5, one was at 7.75. So that averages into the eights. Depending upon your circumstances, you can count on an interest rate starting with an 8. What does that mean? It means we're going to be struggling with affordability even more than we have been. Now, I want to point out one thing that's critical. The interest rate is simply a number. It doesn't represent a reason to buy or to not buy. It's about your affordability, what you can afford to pay. The challenge is as the rates continue to go up, people continue to struggle to be able to afford to make that higher payment. And I think the housing market's going to feel that pain heading into this winter. So we've got 2.5 months left in the year. We've got Thanksgiving, we've got Christmas. In a lot of ways, sellers shut down over the next 60 days. They say, you know what, especially given how high interest rates are and how little buyer appetite they're seeing, most sellers don't want to have to bother packing up their house and moving during Thanksgiving and during Christmas. And we're literally a month away from Thanksgiving. So you're going to see even less inventory on the market. You're going to see less opportunities to buy a home, which means prices aren't necessarily dropping. I don't think we're going to see sellers dropping prices significantly, especially given the fact that there's an expectation, at least in a lot of sellers' eyes, that, well, things are going to pick up in the spring. We're going to see interest rates drop and more buyer demand. I don't know if we're going to see rates drop in the spring. But the fact of the matter is, what the market believes, what the sellers and the buyers believe, that's what matters. And so we're going to have to really take this one day at a time, and we're going to have to figure out what are what's the inventory going to look like, what are interest rates going to look like, and how are we going to navigate these waters. So here's my advice. If you're looking to buy a home, you're going to find some good opportunities from the sellers that are serious about selling, because those are the people that are going to have their house on the market right now. But I don't expect to see a significant drop in prices. I don't expect to see sellers giving the house away because they're going to just wait until spring. The question becomes next spring, if we don't see buyer demand come back a lot stronger, are those sellers going to keep waiting to sell, or are they going to put the house on the market and start dealing? That's really an unknown. Speaking of interest rates, what's going on? Well, we're up against right now the Federal Reserve and their mantra of higher for longer. And what's higher for longer going to mean? We're seeing it. We're seeing the 10-year Treasury get as high as we have seen in 16 years. And when the 10-year Treasury goes up, mortgage rates are pushed up higher because the 10-year Treasury represents an investment that Wall Street can make in something safer than a mortgage. And so if mortgages aren't paying a high enough return above what the 10-year Treasury will pay them, they're just not going to buy mortgages. They're going to buy Treasury bonds from the federal government. So as we see the 10-year Treasury move up even more, and we saw it move up significantly in the last 30 days, that's what's causing interest rates to push up a whole lot higher. When is that going to change? I don't know. There's an argument that we're at the top, but even if we are, just because you're at the top doesn't mean that you immediately bounce off and go back down. You can stay at the top, and I think we're going to be within this range. So really got to think about what are your priorities, how important is it for you to buy right now, and how much do you think prices are going to change when interest rates come back down? I've been saying it over and over again. As interest rates come back down, I believe we're going to see housing prices go up because we've got a lot of sellers that want to sell, but even more buyers that want to buy that are waiting on the sidelines until the interest rates come back down. So you've got to make your decision, but the Fed is going to be making their decision in the next 2 weeks as well. And they're going to be deciding on November 1st, are they going to move interest rates higher or not? So more to come on that in the next couple of weeks. I think the Fed has a tough decision ahead of them because they're kind of put themselves in a pickle where they're damned if they do and they're damned if they don't. So listen in, join me an upcoming week so I can help guide you on what's happening with interest rates in the market. As you prepare for the holidays, just think about, hey, is this my opportunity to jump into the housing market? There's some amazing assistance programs for people who don't have money for a down payment, because guess what? When a lot of buyers start buying homes like we had in 2020 and 2021, and there are very few homes for sale, sellers are not going to consider small down payment, zero down payment buyers, because they have buyers that are writing offers, paying cash over what the appraised value is, that a low down payment buyer doesn't have that option. So if you're a low down payment buyer, this is the time when you need to be thinking about how can I get into the market and be able to actually get an offer accepted. So if you have any questions about that, give me a holler. Thanks for listening and hope you have a wonderful day. Bye-bye.